Welcome to the Pro Ticker Deep Dive. Today, we're on a bit of a mission, really. We're trying to move beyond the main EV narrative to find where the real money is actually being made in 2025. We're looking at sources that are talking about, quote, the roar of an entirely different breed of EV makers.
And it's so necessary. The hype phase is it's over. We're now in this period of, let's call it dramatic divergence, geography, execution, timing. These things matter more than they ever have before.
The numbers alone tell you we're in a new phase. I mean, the scale is huge. Global EV sales are on track to top 20 million units this year.
20 million. Just think about that. That means 1 out of every 4 new cars sold anywhere in the world is electric.
That's a 25% jump year over year, a huge increase in adoption.
Exactly. But, and this is the whole point of our deep dive, that growth is not being shared equally. Not at all. The market is ruthlessly sorting the winners from the losers.
Okay, so let's just lay it out. A quick snapshot of 3 key players year to date. First, you've got XPeng, surging an astonishing 117%.
Right. An incredible run.
Then there's Rivian, a much more modest but still important 14% gain.
And that 14% comes with a huge asterisk we need to talk about. A profitability asterisk.
And finally, the cautionary tale, Lucid, down a sobering 53%.
Up 117, up 14, down 53. I mean, that level of contrast tells you everything. You just can't ignore the details anymore.
Okay, let's unpack this. We'll start with the macro picture. Section 1, the backdrop.
And you have to start with China. It's the new world order for EVs.
Right. They aren't just participating anymore. They're orchestrating the whole revolution. China now accounts for 2/3 of all global EV sales.
And here's the killer point. They've reached price parity. Their EVs now cost the same as a regular combustion car. It's not a luxury niche over there. It's the mass market.
Which explains BYD. They've officially dethroned the old leader. Through the first 3 quarters of this year, they've built up a lead of what? 388,000 units?
It's a staggering number. And that Chinese juggernaut has forced a global reaction.
A reaction that looks like some major policy headwinds here in the West. As China gets more efficient, Western governments well, they're pulling back support.
We're seeing it very clearly in the U.S. The big federal tax credit, the $7,500 one, that expired back in September.
So you get a rush of sales in Q3 to beat the deadline.
And now everyone is bracing for a slump in Q4. It creates so much uncertainty for these companies.
And Europe's doing the same thing. The subsidies are drying up. France cut its EV budget by 1/3. Germany just ended its program completely.
So now you have to compete on your own merits, on product and cost, not on government handouts.
The most aggressive response, of course, has been protectionism. Tariffs.
Oh, absolutely. The EU started with tariffs as high as 45.3% on Chinese EVs.
And the U.S. went even further.
100%. A full 100% tariff.
Yeah.
But that's not even the most existential threat.
Right. This is where it gets really scary. It's not just the finished cars. It's the talk about tariffs on battery components, like Chinese graphite.
And the number being floated is just, it's hard to even comprehend. A 920% anti-dumping duty.
920%.
If that happens, it could raise the cost of making a battery by 125%. The battery's already maybe 40% of the car's cost. So this just breaks the entire economic equation for mass market EVs in the West.
So while the governments are fighting over tariffs, the engineers are just rewriting the rules. The tech race is outpacing the politics.
It really is. We're finally seeing silicon anode technology hit commercial production this year. We're talking 40 to 60% boost in energy density. That's a game changer for range and for weight.
They're the holy grail. Solid-state batteries. They're getting so close.
Yeah, probably not widespread until 2026, maybe 2027. Toyota seems to be leading that charge.
It's fascinating. We all fixate on the car, the design, but the real tech, the real advantage is all happening under the floorboard.
Good point. And speaking of infrastructure, there's actually some good news. Public fast chargers in the U.S. grew 33% this year, about 17,000 new ports.
Which is just slightly outpacing the growth in EVs on the road.
By a little, yeah. The number of EVs grew 31%. So for the first time, infrastructure is actually keeping pace. It's a small win, but an important one.
Okay, let's pivot. Section 2, the big battle. Growth versus profitability. This really gets to the heart of the XPeng Rivian difference.
It does. XPeng is the pure growth momentum story, no question. They delivered 116,000 vehicles in Q3. That's a 230% surge year over year.
And their mass market sedan, the MO&A MO3, that's a genuine hit. It's consistently selling over 10,000 units a month.
But, and it's a huge but, This is the paradox that keeps investors awake. Their revenue doubled in Q3 to almost $2.9 billion, but their net losses actually got wider.
So they're achieving scale, but they're burning more cash to do it. The classic EV dilemma.
Precisely, which makes the Rivian story so interesting. It's the complete opposite. They're deliberately slowing down to focus on sustainability.
Their delivery numbers are tiny in comparison, just over 13,000 in Q3. So how is their stock up 14%? Is it just financial engineering?
No, it's real. They're running a much, much tighter ship. They hit an inflection point. Rivian achieved $24 million in consolidated gross profit in Q3.
Profit on a gross margin level.
Yes, it's their third straight quarter of being profitable at the gross level. This proves the manufacturing model actually works.
And the metric, the per vehicle number, is the one that really stands out to me. The loss per vehicle went from over $3,000 in Q2 to under $1,000 in Q3.
Just $985. They're so close to breaking even on the hardware of every truck they sell. It's incredible operational progress.
And that financial discipline is what sets them up for their big catalyst, the R2.
Exactly. The R2 SUV. Priced at $45,000 coming at early 2026. They proved they can make money on an $80,000 truck. Now they have to scale that efficiency down.
And then there's Lucid, the 53% plunge. It just shows the danger of being stuck in that premium-only position, you know? The market is moving on.
It is. They've had to cut their production guidance twice this year. The demand for EVs over $80,000 is just softening. Buyers in that segment want status, and a lot of the older luxury brands still own that brand equity. It makes it really hard for Lucid.
Which brings us back to why the Chinese makers are winning. Someone like BYD, it's all about ruthless cost efficiency. They sold 1.6 million vehicles through September.
Their secret is simple, but almost impossible for Western companies to copy. Vertical integration. They make their own batteries, the Blade batteries. They make their own semiconductors. They control everything.
Okay, let's look forward. Section 3, catalysts, competition, and what to watch for over the next 12 months.
For Rivian, the biggest catalyst is the most obvious one. The R2 launch in early 2026. It's aimed right at that mass market sweet spot. The Model Y proved how big that market is. If they get it right, it's not an incremental step. It transforms the whole company.
For XPeng, the game changer isn't hardware, it's software monetization. Their autonomous driving system, XNGP, the adoption rate is incredible.
85%.
Yeah.
And 85% monthly active user rate in cities by May. That's phenomenal. If, and it's a big if, they can turn that into a subscription service, that's pure high-margin revenue. It could completely fix their margin profile.
Then there's the strategic wild card. The Rivian joint venture with Volkswagen, RV Tech, they're exploring licensing their electrical architecture out to other companies.
Wait, so the big idea isn't just Rivian building trucks. It's Rivian becoming a key supplier for the whole industry.
Potentially, yeah.
That's a totally different investment thesis, a much bigger one. If their platform becomes the Android of EV architecture, the royalty revenue would be immense.
But we have to remember, these startups aren't in a vacuum. The legacy players are finally getting their act together.
They absolutely are. Look at Ford. The F-150 Lightning outsold the Cybertruck in Q3. 10,000 units to about 5,400.
Yeah.
That's brand loyalty and distribution networks in action.
And the Cybertruck itself is a bit of a cautionary tale. Sales plummeted almost 63% in Q3. If the biggest name in EVs struggles to sell a really different product, what does that mean for everyone else trying to stand out?
It's a huge warning. Which brings us back to the stock charts we mentioned at the start. They reflect all of this. XPeng's chart is bullish, strong accumulation, trading way above its moving averages. The momentum is real.
Rivian is just range-bound,
Oh, yeah.
stuck. The chart looks like the market is just holding its breath, waiting for the R2.
And Lucid's chart, well, it shows systematic deterioration. It just keeps making new lows. There's no technical floor. It needs some kind of dramatic fundamental news to turn that ship around.
So let's synthesize this. After this deep dive, what's the key takeaway for you, the learner, trying to make sense of this?
I think the 2025 story is really a Darwinian sorting process. It's separating the companies that can build a sustainable business from those that just burn capital. So for the next year, you have to look for three things. First, consistent gross profit. That is non-negotiable. It proves the model works. Second, look for revenue diversification. Software, licensing, something beyond just selling cars. And third, they must have a credible plan for the mass market. The luxury-only game is over.
The next 12 months will absolutely separate the pretenders from the contenders. For you, the key insight here is that the era of just buying any EV stock and watching it go up is gone. That's over. Now it's about finding durable, competitive advantages in a much more mature industry. Scale, efficiency, technology, they all matter all at the same time.
Choose wisely.
See you all in the next ProTicker Deep Dive.